All right. Good afternoon to you, everybody, and welcome back to another episode of Waking Up with Wandy. It's not actually waking up now. We are at almost 2 o'clock in the afternoon here, Thursday afternoon. Happy Cinco de Mayo, everybody. Actually, just had my tacos across the street for Partnership Day here at beautiful Sussex County Technical School. But nevertheless, we have a wonderful opportunity here with our guest on the Stock Showdown Podcast, Mr. Brian D. Mintz. A little bit about background on Brian. Brian was the Chief Marketing Officer for Atheneum Blockchain for 3 years and resigned just last year in order to focus more on Bitcoin and blockchain education. This led him to author the book, which we'll get into, I'm sure, that I think is forthcoming, Bitcoin Evangelism. In addition to his professional experience as an executive in blockchain industry, he's been an entrepreneur for 14 years, since the age of 22 when he started a small business with his wife. They have grown that into a chain of locations, a parent company that invests in small businesses, digital assets, and what's called DeFi, which I'm sure Brian's going to delve into in the podcast. And Brian's been investing personally in Bitcoin and the wider crypto market since 2014, and advising entities on their crypto strategies since 2016. So my students and I, we have Brian, Nicholas, and Frank. We welcome you, Brian D. Mintz, to the Stock Showdown Podcast. Thank you for joining us.
Well, it's a pleasure to be on, and happy to be with some bright young minds that are curious and, just interested in this space. So, I really appreciate the opportunity to be on and talk about everything. I mean, probably one of the most broad subjects in the world right now.
So, Brian, before we were, on air, we were introducing ourselves and getting to know a little bit about you and your background. And you had asked me and my students, like, so what class is this in? And this is the first time that I've actually podcasted with students physically here in the classroom. So this is a real special treat for me, too, is having some student engagement here on the show. But you had asked, what class are we actually in right now? So technically right now, this class is macroeconomics. And you kind of gave a little jovial laugh when I said that. So why is, I guess, learning about macroeconomics in your mind such an important topic in this day and age, specifically to this generation that you have in front of you?
Yeah, I think it's probably the most important subject. If I were to go back and go back through college, go back through high school, I would study macroeconomics at every level if I possibly could. And I would learn from you. And I mean, in this world where we, this day and age where we have podcasts, I think I'd fill up a lot of my time with that. That's what I do right now. I think what I've learned in business and what I've learned in investing is that the broader your time horizon and the broader your perspective, the wiser moves you can make on both the big and the short scale. I just think macroeconomics is a compass to navigate decisions in personal finance and business finance in the way that I evaluate the cash flow of my business. It's certainly there's a micro lens to that. But the lens through which I'm viewing all of these things is a macro lens. The war in Ukraine has an effect on my, little chain of stores here in California. It affects how how much capital I allocate to decentralized finance because of things that are going on in terms of oil production. I mean, to me, it's the most important subject. It's the umbrella under which all other subjects should be viewed.
Wow. You guys should feel privy then to be learning macroeconomics here in high school. It is absolutely fundamental, Brian, to, I guess, everything that we do in the psychology on why we do what we do. So thank you for, echoing why it's so important to learn economics, and hopefully my students can take something away from that. Speaking in, let's get right into economics. There was a big economic announcement that took place yesterday, and hopefully my students can maybe interject on what that big announcement was at 2 o'clock yesterday. What do we got?
The Fed raising interest rates.
Did you hear that, Brian?
Raising the interest rates? Is that what they said?
I think so. I mean, I talk abnormally loud as it is, so sometimes I overshadow my students. But I believe it was Frank and maybe Nicholas as well, and I don't know, I can't hear out of this ear, so maybe even Brian, that they were discussing the Fed increasing interest rates yesterday at 2:00. And, the knee-jerk reaction, because it would basically been telegraphed that they were going to do this half-point raise, the reaction from Wall Street was things were good and the market responded favorably. And then, fast forward to 24 hours later, and it's a bloodbath out there. Yep. What's happening?
Well, I think that half of the pundits that I listened to yesterday were predicting this. I think there's a reason why we have the term dead cat bounce. I think it's because we're in a
Hold up. I was like, I don't know where this came from, and it's not mine, but I've heard it before. So thank you so much, Brian.
Yeah, you know what? I'm just here to validate your professor and to make sure you guys know you're in the right class. But that's true. I've been through several stock cycles. I mean, for most of my investing career in the stock market, I've gotten to experience because we've had this longer than ever bull run in the stock market. So once I was kind of investing my business, when my businesses started, I didn't have any money to invest in anything besides my business, but I was only fortunate enough to be able to invest in this 10-year bull market. So I didn't have a lot of experience with down markets in the stock market, but in the crypto industry, we've had several boom and bust cycles already. So I'm very familiar with this. And so, dead cat bounces. We had a huge bear market in the crypto industry from 2018 to about 2020. And that was a commonplace. You'd see some excitement, some fundamental news would come out. Some investors would do their thing in the market. The prices would ramp up 7, 8, 10% in a day. And then the next day they would go down by 15. And so this is I think it's par for the course. And I think it's the way the game's played. There's a lot of speculation in the market. I mean, there's a lot of weird dynamics. There's leverage and all these sorts of things that are at play too. But I think you mentioned the word psychology earlier. I have a degree in psychology. I wish I would have paired that with a business degree or an economics degree. But my degree was human behavioral science. And I think the components of human behavioral science in the market really are kind of understated. I think the market is a very psychological playground. Yeah.
Now, with that, that psychological playground that you mentioned, and again, let's just say, things are all over the place. It's again, whether it be a swing or a slide, there's just various ups and downs that the average person just can't stomach and can't stomach the volatility. And that's in just the overall stock market, where a lot of people's 401k investments are, their pensions, et cetera. And then you want to throw crypto into the mix, which is just a whole nother animal that even seems more enhanced in volatility because of its relative how should I say this? Relative infancy. Mm-hmm. That it's still such an early part of the cycle with crypto that it has a lot of people deterred because they're seeing what's happening with the stock market, which they know about because these are actual companies. Mm-hmm. And then you throw crypto in the mix and they're like, I don't want anything to do with that. I mean, my retirement account is plummeting and I know that these are companies. I don't know what the heck this is. What kind of advice can you give to people like that?
Yeah, I think I have an appetite, not an appetite. That's not the word. I have a bit of a tolerance, I guess, for volatility through college. This isn't advice. This is just a story, not advice. But I made my living. I made my money when I was in college by playing professional poker. I would go about 4 nights a week. And after I'd get out of classes, I would go from 8 p.m. to 8 a.m. And play poker. And it was boring because I was playing the book and I was playing against, whatever, that whole thing. So, but even when you're doing that professionally and making money at it, it still comes with a lot of volatility. And so my prescription for markets and crypto is certainly not to treat it as though it's gambling, but to understand that you have to have a stomach for this type of volatility. It's gotten to the point where between this point last year and today, so we've been in kind of a prolonged bear market for cryptocurrencies. My crypto portfolio is probably down about $1 million from where it was this day last year. And I enjoy that because I am grateful for the opportunity to continue to dollar cost average into assets, which I believe have inherent value. I don't YOLO, as the kids say, into any particular asset. I just make a monthly buy. And when I'm making my monthly buy and the prices are down, this is true for the stock market. This is true for crypto. I feel like it's Black Friday and everything's on sale. So these days I didn't buy yesterday. I would never buy on a day like yesterday. I buy on a day like today. And I'm glad when this time of the market lines up with when I usually do my monthly buying. People do that with their 401k. They dollar cost average into their 401k, but then when it comes to buying individual stocks or individual, funds or crypto, they think of it as like an entirely different animal. Do what you do with your 401k across your investments. And there might be other techniques that people do to maybe gain some alpha. But for me, dollar cost averaging, it enables bear markets to be a really exciting thing. So that's kind of how I cope with that, what would otherwise be a depression or a panic to sell. I mean, that's probably the worst thing, right? It's not just that it bums you out for the day. Oh, I'm worth less today than I was last month. In terms of my portfolio, I just don't want people to panic into selling, because then they're locking in those losses. Then they're actually losing. When we're talking about companies, when we're talking about cryptos, that I in my book I make a case for having some, particularly Bitcoin, that have an intrinsic or an inherent value to them. And that's the same thing with companies. People analyze companies. They say, "Oh, I'm not going to sell this company because I see the value that it serves." I make that argument with certain cryptocurrencies as well. And so those are the ones I'm buying into. I think that the markets for NFTs and some of these other assets that are very speculative or based off personal taste, those can be very dangerous in this kind of market. But looking for value, applying Warren Buffett strategies to new frontiers like crypto, maybe a kind of a novel idea, but I think it's a tried and true thing. So anytime we can take old wisdom or general wisdom and apply it to new technologies and new frontiers, I think it's kind of a match made in heaven.
Now, it's interesting that you just referenced the great oracle of Omaha, Mr. Buffett here, with crypto in the same sentence. Yet what happened last week, over the weekend, you four? He said you could give me all the crypto in the world. I wouldn't spend $25 on it.
Yeah.
Right?
I think he particularly said Bitcoin. He called Bitcoin out. I think it was, he could give him all the Bitcoin in the world. He's also said that Bitcoin was rat poison squared. Now, there's also a chapter in my book that says, watch what they do and not what they say. In that meeting, Berkshire Hathaway also announced that they dropped MasterCard stock. And they purchased Neo, which is a crypto bank. And so that was a lesser publicized portion of that meeting. But they made their first foray into crypto recently, and I haven't seen a single headline about it.
Interesting. Y'all pick up on that? So Buffett is saying blasting Bitcoin, yet meanwhile he's behind the scenes buying into a crypto bank, right? Mm-hmm.
Yeah, Neobank, NEO. Please fact check me on that. But yeah,
no, it sounds plausible. So I thought that was interesting, an interesting tie-in. Does anybody here? I have a million questions to keep going with Brian, but I don't want to monopolize the show. But do any of my students have any questions that they want to ask Brian about crypto or Bitcoin?
So where do you suggest to start? If you were to start now, or I don't mean that, by now I don't mean today, but within, a few months from today, where would you start?
Yeah, great question. Are you asking as far as how to actually buy the crypto assets, how to go and buy Bitcoin? Or are you talking about how to structure an investment strategy? Is that kind of more your question?
Yeah, I would say I'm thinking more of your investment strategy.
Okay. there's 10,000 different cryptocurrencies out there. I worked for a crypto project, and there's just a lot of different coins out there. So first of all, you have to categorize and kind of make some sense around which individual assets you're talking about. So for me, I like to break them down into particular asset classes within digital assets. So for example, Bitcoin is kind of like a digital gold. I don't believe it's a currency right now in its current iteration. I believe it's too volatile to be used. I think there's a lot of infrastructure that's coming along in terms of the Lightning Network that actually can make that possible. But let's just call it a digital gold for right now. That's kind of a category of its own. Then you have something like Ethereum, which is a smart contract platform. I'm not sure how familiar you guys are with smart contracts, but the way I would kind of differentiate between Bitcoin and Ethereum is not that they're competitors, is that if Bitcoin's gold, Ethereum's like oil. Or another way to look at it, if we're talking about the iPhone, if Bitcoin is Apple Pay, then Ethereum would be the App Store. There are two parts of the iPhone, but they serve two different functions. Ethereum, with its smart contracts, is enabling something called decentralized applications. Decentralized applications are where the decentralized infrastructure of the future is going to be built. So if somebody's going to make a decentralized Uber or a decentralized Netflix or any of those types of applications, that is going to be built on something like Ethereum. So there's the digital gold category, and then there's the smart contract category. And so projects that are competitors with Ethereum would be Cardano, Tron, Solana, and there's a variety. There's many different smart contract platforms. So I would put that in a basket. So I'd have my digital gold basket. I would have my smart contract basket. There's things called oracles. I don't know if you're familiar with Oracle protocols. The most popular Oracle protocol is called Chainlink, and that's a tie-in. That's an essential piece of smart contracts, but it's kind of an asset class of its own. And the way this works is, so let's go back to a smart contract. Imagine you and I were betting on the Super Bowl, and I said that I think the Rams are going to win, and you say that you think the other team's going to win. I don't remember who the Rams played in the Super Bowl. Bengals. I'm not a big football guy. I just know I'm from Southern California, and people were very annoying about it with the flags and everything. So anyways, so you said the Bengals are going to win. I say the Rams are going to win. We put that in a smart contract. Okay, great. So neither one of us has control over that contract. And when the Rams ultimately won, I would get paid out my $100 bet. But who gets to decide what tells the smart contract who won the game? How do you keep that decentralized? Because then you're reinserting trust into the equation that either you or I are inputting that. So that's what oracles do. Oracles are a decentralized platform that go out and they go to all the betting websites around the world and they aggregate all that information and they come to a consensus and say, oh, the Rams won the Super Bowl. So you're not trusting any individual party. The oracle is then sending that information to the smart contract and executing the smart contract, paying out the winner of that bet. So oracles, and you can apply that to all sorts of things, all sorts of decentralized applications, and the need for real world information being put into smart contracts. So I would say oracles are another basket of currencies. And so there's Chainlink, there's Band Protocol, and there's some competitors in that space. You can go down the line. Then there's decentralized finance protocols. There's NFT protocols. There's these different baskets. So for me, now that we've defined that there's some different baskets, I would probably start with a third in Bitcoin, a third in smart contracts, 10% in oracles, and then the remainder, I think it's 24%, would be in various other projects, that things that you're interested in. And not just because, what you're interested in is always the best investment, but it's because people tend to research and understand the things that they're interested in. And so they go down those rabbit holes, they understand. So if you're very interested in the NFT space, while that's very speculative right now, if you're going to do better market research in that portion of your portfolio, I would say, attack that with some part of your allocation, if that makes sense.
So now part of this allocation, can it be dedicated, or would you advise it to be dedicated into projects like Dogecoin, Shiba Inu, because these have been like hot things that my students have been recognizing over the last year? What do you think about these meme coins? do they deserve a place in one's portfolio?
No.
Simple answer.
No. So to extrapolate on that a little bit, you know what, I don't want to dismiss Dogecoin in the manner that somebody would have previously dismissed Bitcoin. I think that there's an argument. I think Elon Musk in particular has actually made some fairly compelling arguments for Dogecoin to be more of a currency than Bitcoin. It's a little faster. It's very centralized. I don't like that component of it. The supply is very high on Dogecoin, which in terms of a currency is actually a good thing. I know one of the knocks against Dogecoin is that, I think it's something like 5 billion new coins get created every year. Bitcoin purists don't like when you hear 5 billion new coins get created every year, because Bitcoin really likes its limited supply cap. But when you're talking about a currency, a predictable supply increase, no matter if it's a huge supply increase or not. Milton Friedman actually spoke to this. Milton Friedman said that the best monetary system would be one with a predictable supply. So he said it doesn't matter if it's a 15% increase in the currency every year or a 2% increase in the currency. That actually doesn't matter. But the fact that it's a consistent increase in the currency supply is important. So to kind of steelman argument Dogecoin, I don't have Dogecoin in my portfolio, but that would be kind of the steelman argument for Dogecoin, is that it does have a consistent supply. So I don't particularly like it. I do think that most of the people that hold Dogecoin are holding it as a speculation. I like to train Brazilian Jiu-Jitsu. And when the market's hot, everybody comes up to me after practice and tells me about the new crypto they bought. And it's when the market was hot, it was Dogecoin. And I asked them, okay, cool. Why? I always ask people why. What does your cryptocurrency do? Same thing if you bought a stock and say, oh, like, what does that company do? It's the same fundamental question. And with Dogecoin, the only answer I ever heard was, dude, if it goes to $1, I'm going to be rich.
Because Elon Musk said it's going to the moon. That's why I got it.
Exactly. Yeah. So that's my reservation with that. But I would say if you're going to speculate, that would be a fairly small portion of that, maybe several percent of the portfolio.
We are definitely going to have you back on the show, Brian. We're getting short on time. We got about 2 minutes or so until the bell rings, and I don't want to be cut off by that and disrupted. Do you have any final parting words? Again, you got the book coming out, Bitcoin Evangelism. When does it drop?
So we have a May 31st drop date. Still depends on the publisher, but so we're basically just asking for people. You don't have to pre-order right now. If you go to freshlymintedbooks.com, you just put your name on the email list right there. And the cool thing is, if you put your name on the email list, it's going to get you registered for the first edition of the book. I've hidden a $1,000 Bitcoin wallet in the book. So there's 24 words hidden throughout the book. If you're familiar with Bitcoin wallets, 24-word seed phrase can unlock a wallet. And that wallet, I've put $1,000 worth of Bitcoin in it. So the first person that reads through the book, finds those 24 words, can go open a Bitcoin wallet and dump that $1,000 worth of Bitcoin into their own wallet. So there's a little bit of a hook for you there. If you want $1,000 in Bitcoin, go put your name on my email list today, and you'll have a chance.
Awesome. I'm gonna have to check that out. And again, I'd love to have you back on the show, Brian. I think what you have to offer, at least again with this day and age, is invaluable. And again, it's a topic that I think has people nervous, but at the same time has a lot of people excited. So I thank you for your time today. Anything else for my audience of students here?
Thank you for your time.
Thank you for your time.
Oh, you guys are very welcome. Yeah, I would love to talk to you again sometime.
All right, so I'm going to follow up with you. I'll let you know when this goes live. I'm looking to do this maybe tomorrow morning and get it out on all the platforms. So I'll make sure that you're well aware of that, Brian.
Great. Thank you, guys.
All right. Thank you, everybody, for tuning in. We'll catch you next time. Thank you, Brian.